Hi guys, good morning. Thanks for your wonderful responses yesterday on the YouTube video. I hope you liked the doing it as much as possible. So let's do the euro dollar for the daily time frame. Where are we? We knew that the daily swing was bullish, it shifted bullish again. If we look at the recent most structure on the daily time frame, it is this daily structure where price mitigated this daily fair value gap completely, which is right here, and has given a bullish initiation. Now if we look at the previous day high and previous day low, we are here. This is the PDH and this is the PDL, which is right here, PDL. This is the daily buy side liquidity in the short term, and this are the daily buy side liquidity on the medium term. Let's go and check out H4 time frame. On H4 time frame, what happened? This was our H4 structure, which was this H4. Price came, mitigated this H4 FPG, which was a confluence with the DFPG right here. So H4 FPG fully mitigated. We remove it now, and then it gave a bullish initiation where our next buy side liquidity target is this one on H4, this recent high. If we look at the fair value gaps in this bullish initiation, there is one right here which we see. This is the H4 FPG. Let's go to the lower time frames to see how and where we can build a trade entry idea. This is the H1 time frame. Price mitigated, had a bullish break of structure, continuing with the bullish break of structure here, which is this one. This is our recent most H1 bullish break of structure, and price is going up, and there's this sell side liquidity which price is engineering right here. If you see, this is the H1 SSLQ. Where are the fair value gaps on H1? Yes, there is this small fair value gap which could be a good point of interest, which is DG, which is a good point of interest for us to take a long position. So today what am I planning? I'm planning for London or New York to run over this SSLQ, mitigate this H4 and H1 confluence, and then take a long entry idea. This is what my plan is on euro dollar. Do not get confused with multiple time frames, H4, H1 daily. You can choose whatever you want. What I try to do is I use multiple time frame to simplify my analysis. If I see that this HFVG is within the H4 FVG, then this is something which I will try to wait for mitigation and then possibly take a long entry idea. This is the trade plan for euro dollar. Very simple. Let's go and quickly do for gold. On gold, we know that our swing structure is bullish, and for the last 3 months it has gone on a sideways trend. Whenever it's on a sideways trend, either the buy side liquidity is this one, or the buy side or the next round liquidity is this DFPG. We can only predict which is the buy side liquidity based on what lower time frames are telling us, right? Let's go and check the H4 time frame. On daily time frame, there was this daily fair value gap which price has mitigated. Let's keep the remaining one. This one is the DFPG, which price mitigated very recently and now has started to give a bullish initiation. There could be two possible scenarios here. Let's do some scenario building. First is price can either go and further mitigate this DFPG and then go up, or price can continue to go up. Let's mark the PDL and PDH. This is the previous day high. Where is this one? This one. And then there is this previous day low, PDL. We have the PDH and PDL marked. We are opening in the middle. Either we go to the upside or to the downside. Let's go and check out the H4 time frame on what are we doing on H4. On H4, if you see, price is still bearish on the order flow here. This is the H4 order flow. Price is still bearish. Now price has swept a recent low. If price closes above this and breaks out above this and then comes to retest, then this is a great place to go long, because then our H4 will shift bullish. But what if price does this? This is the H4 FVG. This is another scenario. Price can also run over this buy side liquidity which we see here, mitigate this, and then again start falling down. This is another possibility which price can do to mitigate the daily fair value gap further deeper, right there, right here. If we look at the remainder of the H4 FVG, which is this one, this is still unmitigated and this is quite wide. So I won't be surprised if price does this. Let's go and check out on H1 what's happening. H1, price is on a bearish order flow even now. The best possible trade that I could think of is price runs over this, wicks these highs, runs over this buy side liquidity and creates a market structure shift. Price is still willing to go to the downside. This is my trade plan for today. Very simple. H1 order flow is bearish, H4 is the sweep. If H4 has to shift bullish, we want this hypothesis of ours to be completely invalidated, H4 candle to close very strongly above, then we can assume that our hypothesis or our plan for today is invalidated. This doesn't mean we don't trade, then we take a trade towards the long side based on how this price develops. But based on what I could see now, this is a nice buy side liquidity which we could possibly see it running over through, and then we take a shorter time frame trade to the downside. This is the trade plan for gold. Let's go and do a similar thing on USDJPY. On USDJPY, our daily internal order flow is bullish. Price mitigated these daily fair value gaps and has started giving a bullish initiation. If we look at the PDH and PDL, this is PDH, this is PDL. We have completely balanced the daily fair value gap, so if price has to go up, it needs to continue going up. Let's go and check out the H4 time frame. On H4, on the daily time frame, we have gotten an H4 market structure shift, which is this. Where are the fair value gaps on H4? There are no fair value gaps in this structural range. About H1, if there are areas where we can possibly go long from H1, if we look at the fair value gaps, this was our recent most swing on H1. Internal had shifted bearish, which is here. Internal shifted bearish to do what? It mitigated the discounts. Our objective of the H1 swing at least is over. What are the remainders of FVGs? There is a nice HFVG right below the previous day low, which we see here. Now this is how we can build multiple scenarios, and yes, there is one HFVG right here, which is here. But if this H1 order flow has to hold, this HFVG is a drawn liquidity. We'll rather ignore it, and you see a nice sell side liquidity being engineered here, which is this. What I would love UJ to do today is, I'm not in a rush because things are still developing. I'll wait out for it to take the sell side liquidity and give me a shift on H1 first. Once it gives me a shift on H1, then I can know that now my shorter time frame direction has become bullish, and then I would start taking longs. Otherwise, if I get an HFVG within this range, let's say somewhere here in the London session, and then New York comes and mitigates this HFVG, then I would prefer taking a short trade to target this SSLQ that we see here. This is how we can use multiple time frames, H4, H1, etc. H4 is bullish. H1 internal is bearish, swing is bullish. This might be the remainder of HFVG that we might expect price to mitigate, and then we can possibly take a long entry. No need to rush for a UJ long. wait for a UJ short to target this SSLQ. Once this shifts, then we can possibly take a UJ long. When would our hypothesis get invalidated? If this price goes up, creates this break of structure, no need to rush. When it goes up, it will leave behind fair value gaps. Then we can look for taking a trade tomorrow, day after tomorrow, next week, whenever it comes. This is the trade plan for euro dollar, gold and UJ. Let me know in case you have any questions or comments in the comment section. I am purposefully doing these outlooks fresh with you guys. Multi-time frame analysis should be used to simplify trading, not complicate trading with multiple FVGs and confusing signals. Look how we did. We went to the daily time frame, built our bias, then went to the H4 time frame, confirmed our bias, and then we are using H1 to build an intraday bias to fulfill the objectives of H4 and the daily time frame. This is how, if you keep your things very simple and plan simple, then you can execute it very confidently. Needless to say that your risk should be managed. You should be taking trades only during the session hours for high probability trades with volumes. Let me know how you liked this video, or if you have any feedback in the comment section.